What's up, guys and girls? How is everybody doing today? Our dear traders, welcome to Olymp Trade. My name is Angie. I am a financial analyst here with Olymp Trade, and today our topic is going to be the Japanese candlesticks and Japanese candlestick patterns. First and foremost, let me go ahead and check the sound and the picture. Please let me know in chat if you can hear me and if you can see me well. Give me a shout out. Let me know what country you're joining me from today, or just put some plus signs just as long as I know that you can hear me and that you can see me well. Manowar Alam, hello, hello. Pritesh Ramtiki, hello. And Tanvir Kam. I see you in chat. Welcome, everybody. Ahmed Basir, welcome. Ahmed Abdallah, welcome as well. My friends, while I'm waiting for a little bit more of a confirmation from you guys, I do want to remind you to please make sure that you are subscribed to our YouTube channel. Go ahead and click on the red subscribe button if you have not done so already. Give this video a thumbs up, show us your support, and of course ring on the bell so that you always receive our notifications. And likewise, my friends, I do hope to see all of you on our social networks. We're on Facebook, YouTube, and also on Instagram. So welcome, welcome, welcome. Alrighty, let me go ahead and just check one more time. Mr. SNLO is from Cork, Ireland. Welcome, welcome. Let's see here. Reedley Fernandez, thank you so much for the confirmation. Ahmed Abdullah is from Egypt. Once again, I just want to welcome everybody. Thanks so much for joining today. I think what we'll do is we'll start off with a brief presentation. Like I mentioned, so today we're going to speak about what the candlesticks show us. And also we'll look at a few really popular candlestick patterns. We'll learn how to identify them, and then of course we'll look at some live examples on the platform. Today we're going to discuss the bullish and bearish engulfing, the three white soldiers, and the three black crows, as well as the hanger, hanging man, inverted hammer, shooting star, and morning star and evening star as well. Now, my friends, I do want to let you know that the Japanese candlesticks, they were developed back in the 17th to 18th century in Japan. The technique, the Japanese candlesticks, they were developed by, and I do hope that I pronounced this name correctly, it is Munehisa Homa, and Munehisa Homa was a Japanese rice trader. Alrighty, so first let's start with what the Japanese candlesticks show us. So basically each candlestick has four parts. It has the body, which is the thick rectangle in the middle. And it has also the upper shadow and the lower shadows. These shadows are actually also sometimes called wicks, like the wick on a candle. And also sometimes they're called tails. So, I think it's important to know all these different terms because you will see them, if you're reading different articles or if you're listening to some webinars, whatever the case may be, sometimes different analysts or even different traders will name these parts differently. So, and so basically it does have two parts, the wicks and the body, but they show us, they give us data for four parameters. Each candlestick shows us the price of the price opening, the price closing, the maximum that the price has reached, the high, and also the low, the minimum that the price has reached during that specific time, which is our chosen time frame. So, of course, when we'll look at the platform, when we switch to our platform, of course, I'll show you one more time where the time frame is right at the bottom of the platform. And basically, if you have selected the 1 hour time frame, each candlestick will show you how it changes within that 1 hour. If you have selected, for example, the 5-minute time frame, each candlestick is going to show you how the price has changed every single 5 minutes. And if you switch to the 1 day time frame, each candlestick will show you the price changes for 1 day, and and so forth with the different time frames. If we have a green candle, we have a bullish candle. This means that the price has increased. Okay, the price opening will be on a green, a bullish candle. The price opening is going to be on the bottom of the candle because the price did increase. The closing price is going to be at the top of the body of the candle. And like I already mentioned, these wicks, the wick above the body is going to show us the maximum that the price has reached during that time. And the lower wick is going to, the lower shadow is going to show us the minimum that the price has reached during that time. And likewise, we have a bearish candle, which is going to be, in most cases, going to be selected in red. You do have to pay attention because on some different platforms and even on the Olymp trade platform, you can switch to different colors. But this is just, the main scenarios. So with a bearish candle, if it's red, that means the price decreased. The only thing that you have to remember is that the opening price is going to be at the top of the body, and the closing price is going to be at the bottom of the body. Let's see here, my friends. I am going to check back in chat at the end of the stream. You are more than welcome to ask your questions. If they are related to the topic, I will do my best to reply to you. If you have any other questions, my friends, I do highly urge you to please make sure to leave them in the comments section below this video once it's posted on the channel, which is about 5 to 10 minutes after the stream. And either myself or Yaroslav, any trading related questions, as I mentioned before, are going to be answered by us personally. Alrighty, let's continue. So the first candlestick pattern that I would like to tell you about, and let me just mention one more thing. These candlestick patterns that I'm going to be showing you today, they are reversal patterns. So they can be found at the bottom of a downtrend or at the top of an uptrend. So since these are reversal patterns, you do want to look for these patterns whenever the price has reached a strong level of support or resistance. And I do want to mention that last week I had an awesome stream about support and resistance levels, how to identify them, how to draw them, and how to apply them in trading. So if you missed it, just a brief second here, I'm going to go ahead and post the link for you in chat, so definitely check it out because this goes hand in hand, support and resistance and reversal patterns. And if you're watching the stream after the webinar, of course, the link is going to appear in this upper right corner. Alrighty, so the first one we're going to talk about is called the bullish engulfing. The main thing that this is a reversal to the upside, so this is going to be found at the bottom of a downtrend whenever the price has met support. The main thing that we want to pay attention to on an engulfing pattern, on a bullish or a bearish engulfing pattern, is that the second candle completely engulfs, it completely covers the previous candle. So with a bullish engulfing, the second green candle has to completely cover the red candle. It has to open below the red candle and close above the red candle. So once again, so it basically covers the entire, it just swallows the price movement. Sometimes you may actually see that this, this candle actually swallowed and engulfed the previous 2 or 3 candles, which is also really, really great. So we're looking for momentum. The bigger, the body of the candle, the bigger the body of the second candle, of course, the better, the bigger the engulfing, the better. So this is bullish engulfing, and we have the same scenario with a bearish engulfing. So a bearish engulfing is a reversal pattern to the downside. So we're going to find this kind of patterns at the end of an uptrend whenever the price has met resistance. And just like with the bullish engulfing, the main thing that we have to look for is for the second candle, this red candle, to completely cover, to completely engulf and swallow the first candle. And in this case, as you remember, on the green candle, this is the price opening, this is the price closing. On a red candle, this is the price opening, and this is the price closing. So the price has to open above the green candle, close below the green candle. So these are two, probably one of the most popular Japanese candlestick patterns. So the bullish and bearish engulfing. The next one that we are going to speak about is called the piercing line. So basically, first I'm going to show you the reversal to the upside. So this is a reversal. This is going to be found once again at the end of a downtrend whenever we've met support. What we have to look for in a piercing line pattern is that, remember, so we have bears, we have sellers, they're in control. You know, they're pushing the price down, they're pushing the price down. Well, the next candle, what happens is it gaps down. It opens below the closing price of this candle. So we have a gap. And then it closes at least at the midpoint of the first candle or above, but at least at the midpoint of the first candle. The bigger the second candle, the bigger the green candle, the more the covers of the first candle, of course, the better. The more likely that a reversal is approaching, or that we are witnessing a reversal pattern. So basically, once again, with the piercing line, we want to see a gap down. We want to open below the previous candle and close at least at the midpoint or above the first candle. And of course, I'm going to show you all of these scenarios on the platform, which is really cool. I have some interesting cases for you. And so the piercing line is to the upside, and likewise scenario we have to the downside. So whenever the price is at the end of an uptrend, we have a reversal to the downside. This pattern is actually called the dark cloud cover. So the first one is piercing line. This is dark cloud cover, and it's the same scenario. So we have buyers, we have bulls. They're in control. You know, buying power. And then the next candle, the bearish candle, opens with a gap up. So this would be the price closing, but it opens with a gap up and then closes at least halfway down the middle of the first candle or more. Once again, the bigger the second candle, the better, or the more likely that a reversal is, that we're watching a reversal. Alrighty, my friends, let me just check in chat. I do see that everything is fine. Prashant Shah, I do have some trades open. I will explain them and show you them after my presentation. Alrighty, so the next reversal pattern that I would like to show you is called the morning and evening star. Once again, the morning star is going to be a reversal to the upside at the end of a downtrend. Here we have to pay attention to a couple of things. So a reversal to the upside. First, we have a big bearish candle. We have sellers. The second, so this pattern has three candles, okay? Three parts. I should have mentioned that from the beginning. So the first candle is going to be a big bearish candle. We have sellers. The middle candle, the second candle, is going to be a small body candle. And actually, this candle can be green or red. It can be a bearish candle or it can be a bullish candle. It does not matter. This candle, the middle candle with a small body, it basically shows us that there is indecision on the market. And then the third candle is the one that we really have to watch for. The third candle has to be a bullish candle. And once again, it does have to at least cover to the midpoint or above. Once again, the bigger the green candle, the better. But the green candle does have to close within the first candle, but preferably at least from the midpoint and above. Okay, now there are a few interesting key notes that we have to consider whenever we're looking at the morning and evening star. A lot of times it's accompanied by gaps. Gaps is the it's a change in the price. Most of the time, whenever we're looking at the price chart, the price is going to close, and then the next candle is going to open at that same level, okay? And then it's going to continue up or down. A gap is where the price moved down, for example, significantly, and it did not meet any of these prices in the middle, okay? So we're going to see a gap, basically, of no prices right here between these candles. Now, if there is a gap between the first and the second candle, then the signal is strengthened. If there is a gap between, if there's also a gap between the second and third candle, then that signal is even stronger, and there is even a higher probability that a reversal is approaching, or that we're watching a reversal. So once again, first candle is red, bearish. Middle candle has to be small body. Does not matter if it's red or green. The next candle has to be green, and it has to cover at least to the midpoint or above, but it has to be within the first candle. If we see gaps, then the signal is only stronger. And likewise, we have the same scenario, which is the evening star. And this is a reversal to the downside whenever the price has reached resistance at the end of an uptrend. The first candle has to be bullish. We have buyers on the market. The second candle can be red or green, does not matter. The small body tells us there's indecision on the market. And then the third candle has to be bearish. It has to be a red candle that covers at least to the midpoint of the first candle, preferably even more, the bigger the better, but it does have to close within the first candle. And of course, once again, don't forget about the gaps. If we're seeing gaps, especially to the left and to the right of the two candles, then we have a stronger signal. Alrighty, so the next interesting pattern that I'd like to tell you about is called the three white soldiers and three black crows. So the three white soldiers are bullish, and the three black crows are going to be bearish. Now, this is actually more of a confirmation after a reversal. So whenever we're watching and we see a reversal is happening, price met, for example, support, couldn't sell, no more sellers are on the market, and so the price starts rising. If you see three bullish candles back to back, then it's very high probability that this can serve us as a confirmation signal of the reversal. The only thing that I want to mention is that I don't particularly like the way that this picture is displayed. The thing is that what we're seeing is it's not exactly, it shouldn't exactly look like this. So if we have a bullish candle, the price opened here and closed here. So the next candle has to open here and rise. And if it closes here, then the next candle should open here and start rising. But just so that you understand that this is, this may not be the most ideal display of the pattern, but you just have to get that general idea. You want to see three bullish candles in a row, following a reversal to the upside, which can serve us as an additional confirmation signal to enter an uptrade on price increase. What I want to mention about the three white soldiers and three black crows is that the bigger the bodies of the candles with small shadows, with small tails or wicks, the better. Okay, and of course, the likewise scenario we have to the downside is three black crows. We want to see three preferably big-bodied red candles back to back. Alrighty, I'm going to speed things up. We're almost done with the presentation, and then I'm going to switch to the platform. Okay, we're running out of time. There's also what's called a hammer, inverted hammer, hanging man, and shooting star. These are small body candles with a big shadow, a big tail. It has to be at least twice the size or bigger than the body. We can see these this kind of candlestick at the end of a downtrend, so a bullish reversal, or at the end of an uptrend, so a bearish reversal. They look similar. But here's the main general idea. So this is a bullish reversal. So this is at the end of a downtrend. Remember that we have to identify key levels of support and resistance, and at these levels we can look for these patterns. What do these patterns tell us at the end of a downtrend? It shows us that sellers, they try to push the price lower. They attempted to, sell more, but buyers came on the market. They pushed the price back up, and it closed about the same in the same vicinity that the price opened. Okay, so this can be as a signal of rejection of lower prices. So this means that sellers, bears, are losing momentum, losing control. And likewise, a scenario on the inverted hammer, it can be green. What does this candle show us? Basically, it shows us that sellers, they tried to push the price down. They tried to push the price down, but bulls, buyers, they took control and they pushed the price all the way up. So we have this. So this is showing us bull buyer strength. This shows us seller, bear. What's the opposite of strength? Weakness. So this is seller weakness. This is buyer's strength. And of course, likewise scenario with the bearish reversal from at the end of an uptrend. So basically what it shows us is that, buyers, they tried to push the price up, but they couldn't. And sellers, they came and they pushed the price down. So this candle will show us seller strength. And this one would basically show us bull weakness, because they tried to push the price up, but bears came and they pushed the price down. Let's go ahead and switch to the platform. Now, my friends, I do want to mention one thing. You can use the candlestick patterns on any time frame, but the higher the time frame that you're looking at, the more probability that the patterns will have. They'll be, of course, much more visible, and as a whole, higher time frames have more reliable data. So my friends, let me just show you a few interesting scenarios. So I do have two trades open right now. I opened them just a few hours ago. I have Euro US dollar and GBP USD. And the other thing that I need to explain to you, very important, is you cannot and you should not rely only on candlestick patterns alone for entry points. You should use them in conjunction with other technical indicators as well as oscillators, and use the candlestick patterns as a confirmation for entry points. So basically right now I have three indicators on my chart. I have the MACD, parabolic SAR, and the EMA. With default settings, basically this is the MACD Professional. I just wanted to show you how these how you use the patterns along with your with other indicators. So basically, I'm looking at the 4-hour time frame on the Euro US dollar, and what I see right here is a bearish engulfing. And I did mention to you guys earlier that sometimes you will see scenarios where the engulfing candle actually engulfs not just the previous candle, but also, the previous, well, it actually engulfed, I'm not going to engulfed all of these candles right here, actually. The way that you can check right here, if you point on the candle, in the bottom left corner right here is where you can see the price opening, price high, price low, and price close. And as we can see here, the price closing is 1.2680. The price opening here is 1.2687. So the price opened above the closing price of the previous candle, and we can clearly see that the price, the candle engulfed the previous candle. But just acting on that alone, well, at that time, if I was looking at the chart on the 20th at 12 o'clock, maybe I would have used an oscillator or to confirm. But as you can see with my parabolic SAR, with my MACD Professional strategy, the parabolic SAR reversed to the upside. The price broke the EMA down. The EMA is pointing down. We have a cross on the MACD, and the histogram is increasing. This is why I entered a sell trade for a down trade for $100. I'm using the 200 multiplier. I set my stop loss at -50 above these maximum, above these highs. My take profit is 100, so a 1 to 2 excuse me, risk to reward ratio. Alrighty, let's see here. I wanted to show you something here, but I'm going to switch to some other examples because they are more interesting. The next one, let's go ahead and take a look at GBP USD. I also entered a down trade on GBP USD. And actually, we have a similar scenario. We do have a bearish engulfing right here. It's not as big as on Euro US dollar, but I did check the prices right here. And this red candle completely engulfs this green candle. It opened above, closed below, completely engulfed this candle. And likewise, we do see parabolic SAR reversed. Price moved below EMA pointing down. We have a cross, and once again, and GBP USD and Euro US dollar actually do have a correlation. So they do, not identically, but they do tend to travel in the same direction. So they correlate. And here I do also have a downtrend, but since the engulfing wasn't as big or as visible as on the Euro US dollar, I did minimize my trade amount. I only entered it for $22. So basically, yes, and my take profit is $35. Stop loss is minus 15. So at or about 1 to 2 risk to reward ratio. Pretty much the same with the Euro US dollar. Alrighty, so basically I just showed you like bearish engulfing patterns on Euro US dollar and GBP USD. The next one that I want to show you is AUD USD. And here I've actually identified a few evening star examples, evening star. Okay, let me go ahead and take this one off. I'm wondering, what time is this? This is 8. Okay, let me take this one off. Basically, we have a bullish, we have a green candle, we have buyers. Then we have a small bodied candle. Now, I did mention, remember, gaps are important whenever we're looking at the morning stars, but you won't always see gaps. Whenever you do see gaps, it's just that the signal is strengthened. And the next candle, the third candle, is a bearish candle that closed within the first bullish candle. Okay, so this is a shooting star, a reversal to the downside. Of course, we did miss this signal, so we're a little bit late, and I'm not trading this right now. We're at a strong level of support, so I'm not trading this right now. And likewise scenario once again right here, another evening star to the downside. Basically, we have a bullish candle, we have a doji indecision, and then we have a red candle that closed at least within the midpoint of the first green candle, but within the first candle. And as you can see, the price did start falling. Okay, so that was my evening star examples. And actually, I do want to say that whenever you're looking at candlestick patterns, they work really great on the stock market. So for different stocks and shares. The first one that we'll take a very quick peek at is Apple. Okay. So Apple is actually going to be interesting to watch. We do have a cross on the MACD. Our histogram is growing. Our bearish histogram is growing. Price is trying to break below the EMA, and we have our parabolic SAR reversal. But this is, of course, there's no pattern here. I'm just saying that this is an interesting situation to watch. This is a really, really, this is kind of like what I wanted to show you. Let me see. This is, let's see, 16. This is 10.5. I just want to make sure I don't take the wrong one off, because I have another example. So, okay, this is on the 4-hour time frame. On the 4-hour time frame, what do you guys see right here? I have a bearish engulfing. So the red candle clearly engulfs the body of the green candle. And this is the 4-hour time frame. And look what happens. Let me go ahead and put that back so that we can see this the same scenario. And if I switch to the 1-day time frame, on the daily time frame, this same situation is actually the piercing line. So remember, let me make this a little bit bigger. So we have a red candle, the green candle opened below the closing price and closed at least at the halfway point or above the first candle. Remember, so we have the piercing line for a bullish reversal, and as you can see, the price started increasing, and we have a dark cloud cover if the price is decreasing. Okay, so I thought that was an interesting situation to show you. So basically we have the, excuse me today. So on the daily time frame, I'm sorry. Yeah, so bearish engulfing on the 4-hour time frame, and on the daily time frame we have the dark cloud cover. We have a piercing pattern here and a dark cloud cover here. And this is Apple on the daily time frame. You can also find these patterns as well. Now, my friends, very, very quickly, I want to show you a few interesting situations on the stock market. For example, for Twitter. For Twitter, I wanted to show you this. I want kind of like 3 black crows. We do have 3 bearish candles with pretty small wicks, and we see that the price is actually breaking the EMA down. We have a reversal on the parabolic SAR and a cross on the MACD. So this is going to be an interesting situation to watch. This is Twitter, and then we have Morgan Stanley, also an interesting situation because we have a bearish engulfing. My friends, I am looking at the daily time frame from these stocks. So we have a pretty big bearish engulfing of this previous candle. We have a reversal. And the bearish histogram is also increasing. So that's Morgan Stanley. And the last one that I wanted to mention for today is Cisco. On Cisco, what I wanted to say is that this is an evening star. So we have a bullish candle, small body candle for indecision, and this then we have a red candle that closed at least at the halfway point and beyond, but within the first candle. So this is also going to be interesting to watch for the downside. My friends, for all of those who watched until the end, congratulations. I do have a little surprise for you. Go ahead and leave a comment below this video once it is posted on our YouTube channel. Don't forget to include your account ID number. And tomorrow during our webinar with Yaroslav, we are going to give out some risk-free trades. We're going to choose some random comment winners and give out some risk-free trades. So once again, once this video is posted on the YouTube channel, go ahead and leave your comments below the video. Don't forget to include your account ID number. Let's see here. I do want to remind all of you to make sure that you are subscribed to our YouTube channel. If you enjoyed my presentation, if you got some useful knowledge, and I really do hope that you enjoyed it and that you'll be able to use these patterns in trading, go ahead and give this video a thumbs up. Make sure to ring the notifications bell. And my friends, as always, of course, I do hope to see all of you on our social networks, Facebook, Instagram, and of course, YouTube. My friends, thank you so much for tuning in today. I do greatly appreciate your presence. I will see you next week. And I just want to briefly check in chat to make sure to see if there are any questions. Aniruda, webinar on MetaTrader 4. We will have a webinar on MetaTrader 4 on Friday. Please join us on Friday. Aniruda, about the multiplier, unfortunately, that is not my department. I do teaching how to trade. I don't assign the multiplier for different assets. I'm sorry. Alrighty, and a boring channel. If you have any questions regarding your withdrawals or payment questions, please, I do kindly ask you to contact our support team, and our support will be happy to assist you. My friends, thank you so much for tuning in today. I hope you have a great day, and I will see you next time. Bye-bye.